Ladies and gentlemen, I would like to introduce and welcome the man with the most innovative investment ideas for today, Allah Love, for Supreme Lost Found Investors.
Peace, Supreme Lost Found Investors, and welcome. Welcome to Supreme Lost Found Investors. Got another good episode for y'all. This one entitled CDs versus the stock market. How was y'all week? For those of you who got your portfolios up and running, how's that going? With this trade war going on, has it affected your business, your companies? Talk to me, leave a comment. Let me know, what are your first stocks that you decided to invest in, or did you decide to hold off because of all this Donald Trump, China trade war thing? I mean, if you guys have been doing your homework and keeping your eye on the market, you will notice that a lot of stocks dropped. Some people might want to hold off and not make any trades, any purchases right now. Some are just watching. Others are taking advantage and they're seeing these low prices and they going shopping. They're just buying shares at a terrific speed, because they see how low and how cheap the shares are now. But either way, I got another interesting episode for you. Let's get right into it. Check this out. So I had this one person that I came in contact with in my travels, and we were talking about stocks and why I think the stock market beats the banks, and he brought up he brought up an interesting point. He said he asked me, so what do you think about CDs then? You know, and I won't disclose our conversation, everything we spoke about, but it definitely gave me the idea for this episode here. So first and foremost, anytime something comes up like that in conversation, you want to be able to know exactly what it is that you're talking about. So an immediate question will pop up: what is a CD? So Investopedia says, what is a certificate of deposit, CD? A certificate of deposit, CD, is a product offered by banks and credit unions that offers an interest rate premium in exchange for the customer agreeing to leave a lump sum deposit untouched for a predetermined period of time. Almost all consumer financial institutions offer them, although it's up to each bank which CD terms it wants to offer, how much higher the rate will be versus the bank savings and money market products, and what penalties it applies for early withdrawal. So, I mean, looking at that, you already see, if you train your eye for certain things, you'll see penalties in here. Okay, that very last line, and what penalties it applies for early withdrawal. So that already tells you, if you try to take your money out before that predetermined period of time, you will get hit with the penalty. And if you know anything about penalty and your finance, that means they're taking money from you. So if you decided to put your money in a CD or certificate of deposit, just know that you won't be able to touch your money before that predetermined period of time, or you will get hit with a penalty. You will lose some of your money. All right, that's definitely something that you want to keep in mind when even thinking about a CD and investing in a CD. So now let's look at this: pros and cons of CDs, certificates of deposits. Pros: offers a higher rate than you can earn with a savings or money market account, pays a guaranteed predictable rate of return, avoiding the volatility and losses that are possible with stocks and bonds, is federally insured if opened with an FDIC bank or NCUA credit union, and can help fend off spending temptations since withdrawing the funds early triggers a penalty. Okay, those are not that bad. Those are not that bad. Now let's check out the cons. The flip side: cannot be liquidated before maturity without incurring an early withdrawal penalty. Typically earns less than stocks and bonds can over time. Earns a fixed rate of return regardless of whether interest rates rise during the term. So, I mean, I'll let you guys weigh it for yourselves, the pros and the cons. I'll let you do that, for yourself. But if you checked out last week's episode, then you know that I offer an alternative to a savings account and CDs. I offer an alternative other than the stock market, where you can, keep your money and have unlimited access, penalty free, in case you had to go in there and tap into it, penalty free for tapping into your hard-earned money. All right. Check out last week's video for that alternative. But, typically earns less than stocks and bonds over time. So, you can't touch it before the maturity date, or you get a penalty. You're earning less than you would if you put your money in the stock market. And, it's a fixed rate, regardless of whether interest rates rise during the term. So let's just say you lock yourself into a CD, and then a month later, the interest rates rise. You're stuck. Your money it earns that fixed rate, and that's it. That's what you're getting at the end of the term, whether you did 6 months, I think they do a year, 5 years, you're stuck with that rate. All right, that's another thing to really think about. This is your money, your hard-earned money. I can't stress it enough. So see here, man, Investopedia is a really good source for us supreme loss found investors. Because look right here, it says the best CD rates for August 2019. Best 6-month CD. Garden Savings Federal Credit Union. There's a 2.5% annual percentage yield. Best 12-month CD, Credit Union of Denver, 2.75%. I'm not going to name all these banks, but as you can see, anywhere from a 6-month CD to a 5-year CD. You see the breakdown of the rates that you get back in interest. So after 5 years of the banks holding your money, they'll give you 3.10% interest. 5 years. Do you know how much money you can have in 5 years if you picked a good company, you picked good stock, and you steadily invested over 5 years? Us being supreme, once lost but now found investors, we do our research, we do our homework, and we make smart investments here. So in 5 years, I think we can do a lot better than 3.10%. Look, says these are the top nationally available CD rates from our research on more than 200 banks and credit unions that offer CDs to customers nationwide. Come on, so this is a nationwide thing, you know, like these banks are holding your hard-earned money for these amounts of times, and they're only giving you, you know, this much interest. It's right there, you know. So do what you want with your money. I'm not advising anyone of anything. I'm just here as your brother, offering alternatives that can give you and yours and your posterity a better chance of accumulating more wealth in the amount of time that a bank can yield to you in said amount of time, whether it be 6 months to 5 years. Because in that time, they're taking your money and they're investing it, and they're becoming super wealthy. Super wealthy. And I think it's about time that we do the same. Here you have some more info on CDs or certificates of deposit. This here says, our credit union CD rates offer you higher earnings at a variety of maturity terms that fosters smart banking. Consider laddering your savings into short and long terms so that you have money maturing at different times. We offer competitive dividend rates. Terms range from 3 months to 5 years. Special starter certificate with $25 minimum deposit. No risk, guaranteed earnings. See, I mean, they make it sound real sweet. You know, you hear no risk, guaranteed earnings, you know, kind of makes it hard not to want to do this, right? You know, then they got jumbo certificates of deposit, jumbo CDs. $50,000 minimum deposit, terms range from 30 days to 1 year. I would say the most interesting thing here on this slide is competitive dividend rates. That's very interesting because certain stocks also yield dividends, and let's get into that a little bit because I think the family would love to hear a little bit about dividends. Get used to the word dividends because family, this is what's gonna set us up in the future. You know, coming in retirement years. You know, look at this. John D. Rockefeller once said, "The only thing that gives me pleasure is to see my dividend coming in." Okay, that's John D. Rockefeller. One of the simplest ways for companies to communicate financial well-being and shareholder value is to say the dividend check is in the mail. Dividends, those cash distributions that many companies pay out regularly from earnings to stockholders, send a clear, powerful message about future prospects and performance. A company's willingness and ability to pay steady dividends over time and its power to increase them provide good clues about its fundamentals. See, so you definitely want to invest in stocks where companies pay out dividend checks. You know, in research, you'll find that some of these companies pay a monthly dividend check. Some of them pay a quarterly dividend check. Either way, that's a check coming in the mail to you, you know, periodically by these companies that you're investing in, okay? They're sending you a check. Now, the more you increase your shares, the more your dividend check will be, okay? So you definitely want to keep that in mind, because one day you want to wake up and say, hey, you know what? I'm done with working. I don't even want to work no more. You know what I'm saying? Your next birthday is rolling around the corner, and you're 35 years old now. You don't need to work no more because you got dividend checks coming in that support your entire lifestyle. you know, so I mean, this is a serious thing. Okay, this is a very, very serious thing. So with that being said, when we're looking to purchase stocks, let's also look to see if the company that we're investing in has a dividend yield, and how much. That's something else we need to be looking at. Again, I'm not a stock advisor. I'm not advising you guys of which stocks to pick or anything like that. I'm just your brother, and I'm just pointing, trying to point you in the right direction. Okay. I pulled up Coca-Cola. I think Coca-Cola is a very interesting company. I'm sure we've all had a Coke at least once in our lifetime. But as far as dividends go, Coca-Cola is a powerhouse. Check this out. It says the Coca-Cola company has paid a quarterly dividend since 1920. That's about to be 100 years already. And has increased dividends in each of the last 55 years. The dividend payment amount below is the actual amount paid per common share. So, you can see every quarter they're sending out to their shareholders a check. Right here, this year, they're at 40 cents a share. So I mean, man, if you guys were to really focus in and really invest your money and just get as many shares as you can, you know what I mean? Get your dividend checks every quarter, reinvest that so that you're compound investing your money. By the time you're ready to stop working, you'll be having a dividend check every quarter from a company like Coca-Cola. If you was to choose to invest in a company like Coca-Cola, they'd be sending you a check, March, June, September, so on and so forth. You're getting a check in the mail. All right, family. So I'm not going to make this one extremely long. I'm going to leave it at that. CDs versus the stock market. We went a little bit into dividends. There's so much more to get into, to do the knowledge to. But I'll leave you with that. Let you marinate on that for a whole week. Keep watching these stocks. Drop a comment. Let me know what stocks you guys are looking at. Let me know how your portfolios are going. If you have any questions, holla at your brother. Peace.